Inflation jump wipes out chances of rate cut and puts rate hike back on the table. Let's get into it. The Reserve Bank may have to consider an emergency interest rate rise at its final meeting of the year, and Treasurer Jim Chalmers could look at spending cuts after an unexpected jump in inflation suggests price pressures are growing across the economy. The new monthly consumer price index released by the Australian Bureau of Statistics on Wednesday showed the inflation lifting to 3.8% in the 12 months to the end of October. It had been 3.6% to the end of September. In a major concern for the Reserve Bank, underlying inflation, which excludes volatile and one-off price moves, lifted to 3.3% to sit well above the RBA's 2 to 3% inflation target. Another worry is the breadth of inflation, with the prices of more goods and services growing at faster than 3% than those by less than 2%, the first time that has occurred since the middle of last year. While electricity prices fell by 10% in October and by almost 19% in Sydney, they have increased by 37.1% over the past 12 months. Just in the last 12 months. Wow. The end of state-based subsidies is driving the increase, with the federal government's own subsidy due to finish this year. Housing construction costs are rising, up by 1.7% over the year, after a 0.4% lift in October. Rents fell by 0.2% in the month, but over the past 12 months they have increased by 4.2%. 4.2%, that's a cute number. Now, if you've been following this channel, you know that rents have increased over the past 5 years, the median Australian rent by 43.8%, and that's based on Cotality's data. And here we have the headline and underlying single-digit inflation rates over the past 5 years, topping out at almost 8% in the December quarter of 2022. But if you've been watching the channel, you already know the compounding effect of these figures should have resulted in around 20% total inflation across our economy over the past 5 years. So everything should have increased by an average of 20%. Now, as we've just read, the electricity prices are up over 37% in the past 12 months. And as I've highlighted in previous videos, property prices have increased just shy of 50%, 80% in Brisbane. Food's up 40%. Gold's tripled, so even the compounding effect of these numbers we're presented seems distorted. Chief economist Cheryl Murphy said there was no chance the Reserve Bank will cut interest rates at its last meeting of the year on December 9th. A rate hike may even be considered given the next board meeting is not until February, she said. If the re-acceleration in inflation is sustained over coming months, recognising that the monthly number may be exhibiting some volatility, interest rate hikes are more likely than cuts in 2026. Deloitte Access Economics partner Stephen Smith said the Reserve Bank was now in an unenviable position of trying to support the economy and bring down inflation. I love the wording of that. It's called stagflation, and he knows it. And he knows just how horrifying it is for an economy to fall into such a position. That tricky balancing act is a central banker's nightmare, he said. Chalmers acknowledged the annual number was higher than he wanted, but that it was partly driven by temporary factors such as the ending of state energy rebates. While Chalmers said electricity rebates, including Commonwealth energy bill relief that winds up at the end of the year, were an important way to help Australians with cost of living pressures, he dampened expectations that they will be extended into 2026. Pressed on the mid-year budget update, which will be released early next month, Chalmers said it would not be a mini budget, but conceded there would be some spending cuts. There will be some savings in the mid-year budget update, but the main game is made, he said. After a $10 billion deficit last financial year, the 25-26 budget was forecast in March to show a deficit of $42.1 billion. Wow. Shadow Treasurer Ted O'Brien described the 3.8% rate as extraordinary, saying it would hit the nation's army of mortgage holders. With just 29 days until Christmas, this is the worst possible news for struggling mortgage holders who can now kiss goodbye to any rate cut at all, he said. The Reserve Bank has warned the pace at which the economy can grow without adding to inflation pressures has fallen due to a sharp slowdown in productivity. It was a key discussion point at the August 3-day economic roundtable that was chaired by the Treasurer. Chalmers said he would meet state and territory treasurers on Friday to discuss federation reform and the federal government's national competition policy agenda. Alright, let's have a look at some long-term inflation figures against home loan rates. This is going back around 65 years, where there was a peak of inflation around 1975 and a peak in mortgage rates that occurred 15 years later in 1989. Now, there was a lot going on in the world back then, a lot of instability, not unlike what's going on today, to be honest. But simply looking at this from a technical standpoint, you could argue since 2020, a new cycle has begun. Up to this point, we've had lower trending figures of inflation since 1975 and lower trending home loan rates since 1990. If you look at those last 5 years, the chart has awoken, and I believe there's a real possibility that the long-term trend is up. Now, as a bit of a thought experiment, I thought we'd have a look at the NAB calculator and punch in today's average total mortgage in Australia, which is $694K, against today's average variable rate of 5.69%. And as you can see, the payments are around $4,000 per month, or $1,000 a week. But what would that payment look like if we went back to the all-time highs of 1989? Boom! A 17% interest rate pumping your monthly repayment to almost $10K, or $2,500 per week, just for a $700,000 mortgage. But let's keep in mind the average cost of an Australian home is now over $1 million, and we've just rolled out the 5% deposit scheme for first home buyers. So what does an average $950,000 home loan repayment look like with today's rates? So if you're a first home buyer that just bought an average priced Australian dwelling on the 5% deposit scheme, you're looking at a monthly repayment of around $5,500 per month, or around $1,250 per week. Just your mortgage payment. Far out. And again, that's just an average home in Australia. Now, what does that mortgage look like if we were to go back to mortgage rate all-time highs? Yeah, that's no surprise. The figure is absolutely horrifying. Over $13,500 per month, or $3,100 per week. I'll just point out that's over $160K per year just to cover the mortgage. Now we're just playing here. I don't obviously think we're going back to these levels of rates, but we are living in interesting times. Where do you think the interest rates are headed? Do you see any resemblance to the 1970s and 80s? If you're liking the content, hit that like and subscribe button, and we'll be back with more soon.